right now, 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 right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Let's try that again, shall we? Down it. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the massive breakout that is happening right now above all-time high. At this very moment, Bitcoin is attempting to break through its local all-time high of $125,400. And in fact, in just the last couple of seconds, might have happened. Nope. Right now, Bitcoin is sitting up here above $125,000. All-time high was set back on Sunday at $125,700. That, of course, left what amounted to kind of an odd CME futures gap. It was a CME futures gap that didn't actually have a top, right? Just kind of didn't show up. But as you can see, Bitcoin is going up to fill that quote-unquote gap at $125,000 on its way back up towards our all-time high of $125,000 and onto our price target that we set about a month ago at $130,000. You can see right back over here when we were right around, I want to say about here, like September the 11th or so, we made a price target that by September the 17th, Bitcoin would hit $118,000. And it did. And then we also made a price target that by October 15th, Bitcoin would hit $130,000. And in between these two price targets, Bitcoin would see a dip. Now, we thought Bitcoin would drop down to 112 or so. It dropped down to 109, whatever. But we did anticipate after that bounce that Bitcoin would complete this inverse head and shoulders pattern and break a lot higher, which is exactly what's happening right now. And today, I'm very excited to share with you why I believe that that is exactly what's going to happen. I think that Bitcoin is going to be trading at $130,000 by October 15th, exactly as we've been predicting for the last month. And I am also very confident that we're going to see even more bullishness than that coming this quarter. Q4 historically is the most bullish quarter for Bitcoin. On average, we see a negative 5.3% drop on September. Last September, we saw a 5.3% growth. Whenever you see a green September, that almost always, in fact, always in history, that has led to a very bullish Q4. The average October over the last 13 or 14 years on Bitcoin's chart is plus 20% on the monthly candle. The average November, I almost got caught up there because we also call it Moonvember. The average November is on average plus 40% because we've seen multiple plus 100% Novembers over the course of the history of the Bitcoin market. And so we have this understanding that a major rally is probably coming to Bitcoin very, very soon. If we go out to the BLX chart and we apply those averages, plus 20% and plus 40%, to the green September, which is exactly what we had, of course. We had a green September. BLX is way behind. Wow, let's go to a different chart here. We had a green September. Just delete everything real quick. We had a green September here, as you can see, which is historically rare. Instead of a negative September, we saw a plus 5.5% green September. That would most likely lead into a plus 20% October, which would put us at $137,000 by the end of the month. And if Bitcoin did rally up to $137,000 by the end of the month, and we saw an average November, which is plus 40% off of $137,000 is $191,000. So there is a very real possibility that in the next 7 weeks, you're going to see Bitcoin trading almost double where it is right now, up towards 200 grand. Now, if that happens, then what we're going to end up seeing is probably a bear market according to the 4-year halving cycle, as we've always seen. If we see the 4-year halving cycle Q4 of the off year, so 2025, blow off top, then you probably will see that kind of bear market that you're looking at. But if we don't see a blow off top and Bitcoin doesn't go up to 180, 200, 220 or something like that, then that's where you might not be seeing a very severe bear market. And instead of a bear market, you might see a classical 30 to 40% corrective movement. I personally am leaning somewhere in the middle. I don't quite think Bitcoin's going to go to 220, but I'm also not confident that it's going to go any lower than 150 to 170. So I do expect this is going to be a very interesting quarter, and I'm very excited to be here with you today on Coffee and Crypto. If you guys don't know, we've been doing this show for almost 5 years now. This is our morning live stream where we bring you the latest and greatest in Bitcoin content content. So if you are new here, welcome to the show. Very excited for you to be here. During this hour, we're going to be looking at the Bitcoin charts. We're going to be looking at the Bitcoin fundamentals. We're going to be looking at the $1 billion of inflows that we've seen on the ETFs over the course of just the last day. Literally on Friday, we saw $1 billion of inflows, cumulative inflows, net inflows into the Bitcoin ETFs. We're going to look at the halving schedule. We're going to look at what Q4 is going to look like, what it's looked like historically, what we expect this month. We're going to look at price targets. We're going to look at patterns. We're going to look at trade setups, and we're going to look at the FOMC schedule to see when we're going to see rate cuts. We're going to look at all of that. I've got a great show lined up for you. Cannot wait to dive right on into it. But first, I want to give a big shout out to everybody who is here, because we did, as you know, take about a 2-month hiatus off of Coffee and Crypto. That was intentional. If you guys don't know, my wife just delivered a beautiful baby, which will be 6 weeks on Wednesday. So I decided to take off the last couple of weeks of her pregnancy and a little bit of kind of paternity leave as I'm easing back into things, because, of course, we don't live to work. We work to live, right? Come on, guys. You understand that. And I've just absolutely enjoyed my time off, but I'm here back on the stream. Very excited to be here at 10 a.m. Eastern every single weekday. Cannot wait to bring you guys some great content. Let's get started. Ellie Torres is in chat. Daniel J, Joe Bollier, James Sachs, Brian Barrett, Philly Skills 1428, Peter P, Crypto Surge, Peter P again, Steve, Lion Daddy, Dwarf is in chat. I'm not going to say your full name. Kryptoni, Blasnik, The Jogging Tree, Evan, Santino, let's see, Manchu is in chat, James, number 9. Good to see all of you guys. Good to see all of you. Let's see if there's any good questions or comments that we want to go over here before we jump on into it. Good morning, Jeb. 4 years of wait for the next 3 to 6 months. Yes, 4 years of waiting for the next 3 to 6 months. Exactly. And I hope you guys have been doing what we've been encouraging you to do and building a position. I have just been aping into Bitcoin for like 8 years. If you guys don't know, I got into Bitcoin in 2017. And I tell you what, I've been buying Bitcoin hard ever since then. And I'm very excited about where we're going, because when you get a big portfolio, plus 10% is like a huge amount of money. And so I hope you guys have been acquiring Bitcoin, but I do want to let you know, even before we get into the technical analysis here, some spiritual and some emotional truths. Okay, because the charting is easy. Right, I figured out how to do technical analysis very early on in my career. I am a professional technical analyst. That's my entire job. That's how I've made my, my wealth, is through technical analysis. But frankly, the technical analysis, as I've learned over the last, almost decade doing this, is the easy part. The hard part is the spiritual side of it, is realizing a few core truths. Number one, money is not God, and if you idolize it, you won't have any of it. That's the first thing. If you think to yourself, oh, if I just get enough money, I'll be happy. Well, what's going to end up happening if you do that is you're going to get gripped by fear. You're going to get gripped by greed. When the market drops, you're going to sell at a loss. When the market rallies, you're not going to take profit. And not just because you plan on holding it for a very long time, but because you're not following your plan. So the first thing is you can't idolize the money. Okay, that's the first thing. We are generating wealth to generate a lifestyle for us that hopefully is very generous, that hopefully involves a lot of time with family, that hopefully involves taking care of a family. That's the first truth. The second truth that I want to mention is that it's not too late. A lot of people get into this dangerous belief that, oh, it's just too late. It's too late for me. It's too late to buy into Bitcoin. It's really not. I mean, we talk about, one thing we'll look at today is the parity between, let's just go ahead and adjust my screen here. There we go. I'm kind of floating up here a little bit, aren't I? We talk about the parity between Bitcoin and gold all the time. And what we understand is that Bitcoin is, honestly, in my opinion, a better form of gold. So I don't see any reason why Bitcoin shouldn't be trading at 50, 75%, 90% parity with gold. Well, if Bitcoin was trading at 50% parity with gold, it'd be trading at $800,000 a coin. That's not too late to get into Bitcoin. I mean, you're looking at a 5x to get there, right? If you're looking at Bitcoin going to the same market cap as gold, you're looking at a $1.4 million coin. Again, we'll look at that later. But the key point I want to just hammer home here is that you're not too late. You might be too late to get a perfect entry this cycle, and you might get a better entry in a bear market if one came, but that's a big maybe. If you're buying now and you're going to hold it for 3, 5, 10 years, and that's your time horizon, it's a great time to buy, so long as you can tolerate the risk of we might see a lower low if a bear market were to come. You might see Bitcoin drop down to 90 to 110 in a bear market. So those are two of the things I kind of want to get out of the way up front. Number one, if you idolize the money, you're going to lose it. You're just going to lose it. That's what's going to happen. You have to understand that you're generating wealth for a reason. And the second thing is that it's not too late. Again, this is not the best entry in this market. Duh. I mean, 75,000 where we were buying a ton of Bitcoin, 7 months ago was a much better entry than 125. But if you're going to hold it for long enough, it is still a great entry, so long as you understand that you might have to hold it through a bear market. But ultimately, that is a little bit of the way. That is a little bit of the way that we. That is a little bit of the way that we mature as Bitcoiners. Is we have to hodl through 50% drops, right? We hodled straight through the last bear market, and we hodled straight through the last bear market before that. So if another bear market comes, I'm good. Thanks. Not selling. I'm all good. Let's read a little bit of chat. We'll dive right on into it. Green Day Profits in chat. JC said, Jeb live stream. What? No way. Yeah, we're back. Like I said, guys, we took off the live stream for a little bit just so I could focus on the family, focus on taking care of my wife, taking care of the newborn baby, mainly taking care of my wife while she's taking care of the newborn baby because she's much better at it than I am. But anyway, that's where we've been. But where we're going is we're going to have a lot of fun right here on this stream. So let's get started, guys. Let's jump on over to the charts. First thing that I want to cover with you is some very exciting news from the actual, from the ETFs. $985 billion of entries on Friday. Wow. That's part of what drove Bitcoin up towards all-time high over the weekend. And that's part of the reason that's most likely going to break all-time high on stream right now. Like, honestly, we're probably going to break all-time high right here, right now on stream. It would not surprise me in the slightest. And I'm also very excited. You guys know I was on vacation last week, and I saw Bitcoin coming up here to break 118. So I bought, like, I'm not going to tell you how much, but it was a lot of Bitcoin. I bought a buttload of Bitcoin right here on the 1st, on Wednesday. Ton of Bitcoin. Made 2 very large purchases. Very happy with those. Tempted to ape in and just FOMO in and just dump, 50 or 100 grand into Bitcoin right here. But I'm going to wait a little bit because I don't want to. I personally have a huge bag of Bitcoin already, and I'd rather get a kind of a lower entry. But ultimately, if you're not in, this is a very obvious setup. So let's kind of break down what we're looking at here, right? For those of you guys who can't really see this the way that I do, I talk about this a lot. There's something that you get when you've been an analyst for long enough, and I call it chart vision. It's basically this idea that you're going to see things, and then you're going to draw them, right? Before you even draw them, you're like, oh, I see that right there. And so I look at this chart, and the first thing I see is I see a cup and handle formation forming right here, right there. And that cup and handle formation would be bracketed by an uptrending level of support right there. And that basically, if we compile all of those things together, the cup and handle and the uptrend, then that basically creates an ascending triangle pattern. And if we're creating an ascending triangle pattern, then that gives us a flagpole. And if we have a flagpole, then that gives us a price target. And if we extrapolate a price target, then we have an actual location that Bitcoin's probably going to. See how easy that was? You see what I'm talking about? Like, once you figure out how to do it, it's not really that hard to do technical analysis. What's difficult is doing something about it, right? And so the price target on this bull flag right here, this bull pennant, would be $145,000. And so is Bitcoin going to go to $145,000? Probably not immediately. It's probably not going to just, go straight there tomorrow. But yeah, it's going to hit 130. And then I absolutely firmly believe it's going to go to 135. And then it's going to go to 145. I totally believe that. I totally 100% completely and totally believe that. And this formation is one of the reasons that I believe that. There's a lot of other reasons, though. We've talked about dozens of them on the channel. Now, let's kind of undo everything that we just did here, and let's do a little bit more short-term analysis. The first thing that's showing up to me, and you might see this, is that we had an uptrending level of support right here, right? That broke, and that's fine. That's fine. It broke. No big deal. But we're forming kind of an S-curve, if you'll notice here. This was an excellent take profit, by the way. For any of you guys that went into a long down at 109, this was your safety line. As you guys are learning in the first cohort trading group, when you enter into a long or a short trade, you build something called a safety line. When you break through that safety line is where you take profit. As you can see, boom. We would have gone into our entries right here around 115. Your safety line was right up here. If you're a non-emotional trader, which is very important, that's a plus 5.69% movement on Bitcoin of all things. If you're on as low as 10x leverage, you made 56% on that trade, right? So that's just a side note for all of you guys that are in the first cohort trading group. Nevertheless, we broke that. We set a more shallow uptrend. But if you'll notice right now, it's interesting, we're setting a more aggressive uptrend. So what does that create? That creates almost this like S-curve movement. And where does that go? TradingView does this glitch sometimes. There we go. Where does that go if we extrapolate that? Well, if Bitcoin is able to maintain this new uptrend, this shorter term uptrend, then that means that we're most likely, as we talked about with the cup and handle formation that's going to be forming, it means we're most likely going to break through 125 very soon, as in it might happen today. Now, again, part of the reason why it's going to be difficult to get through 125 is this is a terrible time to buy. It's like an awful time to buy. The noobs are buying, which is part of the reason that Bitcoin is breaking through 125. Those of you that are watching our channel have been seeing our predictions over the last month, and you were buying down here, and you were buying right here, and you were buying over here, and you already have your buys in, and you're not necessarily looking at buying more, except that you might, trade a breakout, right? But we are fast approaching $125,000 again, 125.7, and it will almost certainly break. It would be very surprising to me if we didn't see a major breakout. And by the way, on last week's video, we said before Monday there'd be a correction of $2,000 to $5,000. These are the 3 predictions. I started doing this because people keep saying, oh, Jeb, you flip-flop back and forth. No, I don't. I've made 3 predictions in the last month. Okay? Here they are. Bitcoin will go to 118 by September the 17th. Check the date down here, September 17th and September 18th. It's right there. By October 15th, Bitcoin hit 130. That's to be determined. Last week, I also added one to the mix. But before Monday, we'll see a correction of $2,000 to $5,000 because Bitcoin's going to have a predictable correction when it hits the all-time high. There you go, $3,400. There it is, okay? This is why I write down my predictions, because I'm tired of people saying that we just flip-flop. No, we don't. We make predictions. They're normally right, and we don't go back and forth. All right, so here's what's going to happen. Bitcoin is going to attempt to break through 125. There is a very serious possibility that it might fail. There really is. There is a serious possibility that a breakout above 125 right now might fail, which is why I'm telling you to be careful about entering into a long trade until we get some kind of confirmation. Because as much as we love the fundamentals of Bitcoin breaking all-time high, what you might not love is the fact that Bitcoin has spent an awful lot of time up here overextended on 8-hour RSI, 6-hour RSI, 4-hour RSI, bearish divergence. I would love to see Bitcoin break out. That said, my prediction last week of a $2,000 to $5,000 correction, I'm not really sure that the correction that we saw captured the spirit of what I was talking about. In other words, until Bitcoin does confidently break through here, I'm not convinced. Jeb, how can you not be convinced? How can you be a bear right now? I'm not a bear right now. If you knew how much Bitcoin I bought last week, you would understand that I'm not a flipping bear. But what I do know is that many people, myself included, that are expert traders and expert investors that have been doing this for a decade or more, are looking at these massive RSIs and saying, I'm pretty sure I can get a better entry than that. See the bearish RSI? Divergence? Oh, Jeb, you're telling me things I don't want to hear, man. I want to hear it's going to moonshot to 150, dang it. Did you come here for me to pleasure you, or did you come here for the truth? Because I'm afraid some of you can't handle the truth. Man, I miss being on the mic. The live stream's so much more fun than the video. I love the video, but I don't have instant feedback. I love watching you guys make fun in chat. I love it. Some of you don't want to hear the fact that Bitcoin needs a correction at some point. Is it going to go parabolic? Absolutely. It most likely will. Does going parabolic mean that we never have corrections and we throw technical analysis out the window? Nope. No, it does not. And Bitcoin has rallied $16,000 in less than 16 days. So, before we get super greedy, if you're in a long trade, take your profit. I wish you were in the room, so take your freaking profit, man. If you're in a long trade, take your profit. Get out of that trade now. Get over here, boy. Get out of that long trade. Take your profit. Who's in a long trade right now? Drop a 1 in chat. Expose yourself. Not like that. Expose yourself. Tell us, are you still in a long trade? Are you in a 70x long? And you're up 15,000%. Exit. Exit your longs, period. Exit your longs. Here's why. Because you just made a crap ton of money, and you need to not get greedy. I want to go back to that lesson I taught you earlier. If you idolize money and say, oh, but Jeb, you said it's going to go to 130. I know I said it's going to go to 130. I know I said that, and I fully believe that. I'm not retracting that. What I am saying is that if you're one of these people over in our Discord server that are up 120, 150, 200%, you need to stop being greedy and take some profit. There's something wrong up here if you're like, I got 200% profit. I don't want to take profit. Take your profit. Look for a re-entry. Here's the way a re-entry looks. If we see a correction, great, buy the dip. There's your entry. If we break through all-time high, great, re-enter the trade. But this zone right here, around 125, is dangerous. Dangerous? It's dangerous, man. Right? You know why it's dangerous? Because people are taking profits up here. As soon as you break the previous all-time high and start going bananas, sure, you can go back into the trade. But you reset your stop loss and you reset your risk profile. Right now, what's taking place, if you entered into a long trade down here, and you're right here and you're not exiting, is Bitcoin might come all the way back down here, erase all of your gains because they're unrealized. You freak out and sell right here. And then here's what's going to happen. You're going to wait for an entry when we break all-time high. If that happens, and you're going to miss out on this spread because you wouldn't take profits because you thought we're going to 125, going to 130. I think we're going to 130. Take your profits, re-enter the trade. Okay? If your plan is to stay in a trade for months and months and months, fine. But you're probably not going to be able to pull that off with leverage because you're probably going to get ADL'd out of that trade at some point. If you're trying to plan a trade for the long term, use very low leverage, like 1.5, 2x. Fine. Your liquidation is like 50,000. Okay, great. Whatever. I don't care. That's fine. That's different. But if you're on 5, 10x leverage plus, take your profits. Do yourself a favor. Take your profits. That's my soapbox. Okay? That's my soapbox. Look at all you guys still in trades. For shame. I'm just kidding. No, I'm just kidding. You guys have made a bunch of money. Take your profits. Okay? If we dip down, you get a better entry. If we break through all-time high, then you get an entry. Like, if we drop $2,000, you have an entry. If we go up $1,000, you have an entry. Like, it's not hard to find another entry. Your entry's all over the place. It's Q4, guys. Come on. If you're up a bunch of money, take your profits. Take your profits. Thank me later. Take your profits, squirrel away a third of them over into your investment account, pay yourself, enjoy, let's say you made $400. Take $40, take your wife out to dinner, take $200, put it into Bitcoin, and then take the $160 that's left, and sure, you grew your margin account. Great. Take your profits on your long trades. Because here's what you're going to be if you don't. You're going to be part of a statistic tomorrow, if Bitcoin drops, called the liquidation statistics. Because I'll tell you what we got right now. We got a big fat heat map full of long liquidations down here at 122,000. I understand we liquidated a bunch of shorts. That's great. It's awesome. But guess what? If Bitcoin drops down to 122 and you're going to get liquidated, you need to fix that. Okay? At the very least, put a very tight trailing stop loss on Bitcoin because you already made a bunch of money and you need to be happy about it. Because I'm going to be honest, I don't like this bearish RSI divergence that's forming on some of these higher time frames. Like, oh, well, heck, where is it? We did see it. Where was it? It was on 4 hour? Bearish RSI divergence right there on 4 hour. There you go. Not great. Is Bitcoin going to break through all-time high? Yes. Is Bitcoin going to hit 130,000 by October 15th? I think so. Could we see another drop before we break through? Yep, we could. Now, I will tell you this. I'm very confident that we're going to 130, and a big part of the reason for that is that we're spending a lot more time trading up here. This is time trading at a certain level is something that I look at quite often to gauge the strength of the bulls and the bears. And one of the things that I am looking at right now is the fact that Bitcoin has spent a significant amount of time up here above $122,000, right? We hit 122 over here, then we hit it again, but we only stayed up here for like less than 12 hours. We spent a lot more time up here. You see that? This is what we call a confirmed breakout. That's what we call a confirmed breakout. We broke up here above these levels and we back tested it and we're rallying again. So we are entering into a new range. We are entering into a new range. So if you get out of a long trade, there's nothing wrong with finding another entry pretty quickly. That's fine. But take some profits. Realize some profits. Heck, here's something you can do if you're in a long trade also. You can just take half of the profits and let the rest of it ride. You could do that. You could say, I like my entry. You could say, I'm going to take 50% of the trade and realize it. And the other 50%, I'll just let it run. You can do that, but take some profits. Maybe not the whole trade, but take some profits. All right, because here's what we got. On 6 hour, this is the highest bearish, the highest bearish MACD cross that we've seen since here. See that? That's what we call a top signal. I'm not a bull market top signal, but a short-term movement top signal. You have to understand, this is a very powerful impulse movement that we've seen. 13.7% in 10 days. Bitcoin is a lot more mature than it was back in the day. That's a big deal. That's Bitcoin adding like, what, $350 billion of market capitalization in like a week and a half? It's a big deal. So take some long profits. You even see a little bit of a correction taking place right now on Bitcoin. You all thought, oh, yeah, Bitcoin's going to break through all-time high. It will soon. It will soon. Probably will in the next couple of days. Might even happen today. Take some profits. All right. Made my piece. Let's keep going. I got a bunch of other things I want to share with you now that everybody's like, oh, Jeb, you're a perma bear. I'm going to probably see like 20 comments like that in the chat. Oh, Jeb, you're a perma bear. You just hate Bitcoin. Yeah, that's why I've been buying Bitcoin for 8 years, and I have most of my net worth in Bitcoin is because I'm a perma bear. That's me. Yeah, I'm just a big short. Oh, I love the comments. I tell you what, some of you guys, go ahead. Jump in the comments and troll me. Just because I love reading them. I love them. I love reading the troll comments. They're the funniest comments, honestly. They're super fun. All right, let's read a little bit of chat, and then here's what we're going to talk about next. We're going to talk about the ETF inflows. We're going to talk about the FOMC. We're going to talk about gold, and we're going to talk about where we are heading in Q4. Can't wait. All right. If you're happy and you know it, take your profits. If you're happy and you know it, take your profits. If you're happy and you know it, and you want your wife to know it, then take your profits right now, you jerk. I'm just kidding. Let your winners run. No reason for Bitcoin to drop. No. Don't have to take all of it, but take some. I'm not trying to fold you out of your bags. There's a difference between bags and longs. No. Don't sell your bags. No, I'm not selling my bags. I'm adding to my bags. Bags are investments. That's great. I'm talking about those of you that are in a 50x long, and if Bitcoin drops back down a little bit, then you're going to get liquidated. That's who I'm talking to. All right. Hopefully you guys didn't misunderstand me and think I'm saying that the bull market's over, because I've tried to tell you like 20 times. That's not what I'm saying. I'm saying you need to take some profits because you need to be responsible. Responsible. Beat it, trolls. You think when ETH hits 5K, alts will explode? After Ethereum breaks through 5K, the alts will probably start going pretty hard. A little bit later, if we have time, we can look at the Bitcoin dominance chart to kind of look at alt season. But alt season is coming. Very, very excited that alt season is coming. Let's see. Good to see you back on live. All right, I think I need to clarify a little bit. So let's just go ahead and talk a little bit. This is a bit of a short-term top signal on the 6-hour chart because we have MACD and RSI curving over. That means it's a good time to take profits on the longs. So since some of you guys aren't understanding, I want to make this a bit more clear. If Bitcoin breaks through 125.7 with confidence, breaks through this line, there's your entry. Right there. But those of you guys that have and then you set that entry up to 130 because that's our price target, right? Very simple trade. Very simple trade. Very simple trade, something like that. 8x risk-to-reward ratio, couldn't be easier, right? There's your trade. There's an entry. Let's say that Bitcoin goes through a correction and you establish a downtrend. Let's say this happened. Let's say we have a downtrend right here. Then you would move that entry down here. It's very simple. But what I'm needing some of you guys to understand is that Bitcoin just broke through this trend line. We have this safety line. Right? And so you either need to pay attention to this safety line and take an exit right here at 123, or you can just go ahead and take some profits right here. But your entry was right here, which means your trade setup for what a lot of you guys are supposed to be in right now is this. You're supposed to be in this setup with like a 10x risk to reward ratio. This was your plan. Stick to it. This was your plan. Stick to it. This was your plan. Stick to it. So here's what a lot of people do. A lot of people go into trades with no plan, and they wonder why they're losing money. You need to look at the analysis, set up a plan, enter the trade, and don't change a thing unless the fundamentals change. All right? That's the most important thing. Proper risk management. Saw an orange C8 on the highway yesterday and did a double take to see if it was crypto jab, lol. Yeah, if you guys aren't following me on X, you really should. We got a lot of funny stuff going on over there. Let's see. Let's see. Again, if we break through all-time high with confidence this time, because we haven't really broken through it with confidence yet, then that's where we would go ham. All right, let's talk about it. So one of the biggest things I want to bring up to your attention is this. On Friday, we saw $985 million of entries into the ETF space. I want to take this from a different angle than what we have done recently, and that is I want to look at gold. All right, so let's look at gold. We're going to talk a little bit about gold today. And for those of you guys who don't understand why we're looking at gold, I'm about to learn you something because it's really important that you understand gold. If you don't understand gold, you will not understand Bitcoin. That's a little bit like saying, I understand my country, but I have no idea. I don't know anything about its history. Gold was Bitcoin. Before Bitcoin, you had gold. That's what you had. If I was born 20 years earlier, I'd be a gold bug. The only reason I'm not a gold bug is because Bitcoin exists. It's the only reason. It's the only reason. Bitcoin does gold better than gold. It's the same way that if you didn't go to work today in a car, you would have ridden a horse or you would have walked. You know, horses didn't stop existing and stop being important to history when the car was invented. They just got antiquated. It's very important that we understand gold. And here's part of the history of gold that I want you to understand. On this day, back here, we saw the gold spot ETF go online. Specifically, GLD, SPDR gold shares. In 04, I think it was November 14th. Was that the day? November 14th, 15th. We saw gold go online. So here's the actual chart of this. But I want to show you the spot price so you can see what was happening before and after. This vertical line is the day that the ETFs went online. And in the first year, we saw about $1.5 billion of inflows into gold. The next year, I think we saw like $2 billion of inflows into gold. So those in total in the first 24 months, about $4 billion of inflows into gold. Sounds like a lot of money, right? Oh, well, Jeb, that was in 04. Let's say inflation. Okay, fine. Let's say 8, right? It was $4 billion. Let's say that the dollar lost 50% of its value since 2004. So let's say it was $8 billion inflation adjusted that went in the first 24 months. In the first 24 months, Bitcoin has seen $60 billion of inflows. 15 times what gold saw in the first 24 months. And the first 24 months aren't even over yet. So I think we can safely say that the Bitcoin ETFs have been significantly more successful than the gold ETFs. All my friends that love gold are going to hate me for saying that, but them's the facts, Jack. In the preceding 7 years, gold would rally 346%. And the largest correction that gold saw during that time was 33%. Now, it is important to understand that gold was a 6,000-year-old market when this happened. It was a very old market. It did not have the elasticity, and it did not have the mobility that the Bitcoin market cap has, simply because of the fact that it's a precious metal that has already been mass adopted for millennia when the gold ETF went online. And it still rallied 350% the first 7 years. Now, why are we talking about gold? The reason we're talking about gold is because we need to understand that this is the most successful ETF launch in human history, the Bitcoin ETFs. $1 billion in a day is insane. You're looking at like when you're looking at $1 billion a day of inflows, you're looking at like the SPDR S&P 500 ETF. There are not many ETFs that are seeing $1 billion a day of inflows. Right? That's a huge number. That's a gigantic number for an ETF that's less than 2 years old. For some of the older ETFs, QQQ, VU, all them, it's not crazy. But for an emerging asset class like Bitcoin, that is unheard of. It's insane. And so it is very easy for us to compare what happened in the first 7 years of gold's run to Bitcoin right now. Bitcoin is about to go absolutely parabolic. And I'm very confident that because of these inflows, that's going to happen. There's going to be so much institutional inflow that the 7 years following the ETF launch, which would push us out till 2031, is going to push Bitcoin well above $500,000, probably close to $1 million by the end of the decade. Let's go on to BLX, look at the long-term charts here. On the long-term charts, what we will see is that the spot ETFs on Bitcoin went live over here. If Bitcoin simply repeated history, and in the first 7 years, once again, keep in mind, the Bitcoin ETF launch has been significantly more successful than the gold ETF launch, and we saw a 346% movement in the first 7 years, you'd be looking at Bitcoin trading, up here at like $200,000 by 2031. Now, that's just ridiculous. I mean, come on. Bitcoin's obviously going to do more than that. I think we could say that I think we could safely say that Bitcoin has been at least 4 times more successful than the gold launch. That'd be a 1,500% movement. By 2031, you're looking at $700,000 Bitcoin. But honestly, when you look at the numbers, like I said, we're looking at over 10 times the inflows. So I think you could be looking at 10 times the growth. I really do. By 2031, you could be looking at $1.5 million on Bitcoin. That's a 12x from here. And so for those of you guys who are in trades right now, you might need to be taking some profit because you're on 70x leverage. But for those of you who are investments, don't you dare think about selling. This is not the time to sell. This is not the time to sell. This is the time to, if you are underexposed, you can double down. If you're properly exposed, maybe you ought to wait for a drop. That's what I'm doing. I'm properly exposed. 85% of net worth in Bitcoin, right? But for those of you who are underexposed, if you're going to hold it for 5 to 10 years, you're going to be fine, because Q4 is going to be going to be very successful. We might see a blow off top, and a bear market might come. But over time, those things average out into what is essentially the largest bull market in the history of mankind. Bitcoin has been exploding for over a decade, and that's not going to stop anytime soon. If anything, that's only going to accelerate. You're going to see hundreds of billions, if not trillions of dollars flowing into Bitcoin just the next few months. And that is in large part happening through the ETFs, as you can see right here. So that's the first thing I want to talk about. The second thing I want to talk about is the FOMC. The effective federal funds rate is very important. If you don't know, the effective federal funds rate is it's something called the base rate. For those of you who don't understand the Fed, it'd be a great thing to learn more about the Fed. Excuse me. I plan on doing more content about the Fed, but what you need to understand about, I'll say it again, the Fed, is that it is essentially a criminal cartel that was designed to steal money from you under the auspices of sound monetary policy. And that's a very aggressive claim, but it is the truth. It really is what's going on. What we see from the Fed is that they are devaluing the United States dollar intentionally to basically give themselves money. And the reason that this is important is because they control the economy through a couple of different means. One of the most important means is through something called the effective federal funds rate. The way that we see the effective federal funds rate impacting the economy is something called the base rate. So basically, back when the Fed was being established in 1913, you had a bunch of different decentralized banks in theory, and then they all came together in one bank, which is called the Federal Reserve, right? You had the Bank of New York, you had the Bank of San Francisco, the Bank of different Bank of Kansas City. You had all these different banks, and they all loan money to other banks. And so if a bank needs money, where do they go? Well, if you need money, you go borrow it from a bank, right? Whereas a bank go if they need money, well, they go borrow it from the Fed. And so when you're borrowing money from the bank, then they're getting their interest rate that they're paying you based off of the interest rate that they're borrowing from the Fed, because they're trying to arbitrage 1 or 2% difference so they can at least keep up with inflation and stay in business. And so the effective federal funds rate underpins everything. And so with the effective federal funds rate coming down, it's going to cause pretty much all interest rates to come down as well. In theory, we'll talk about the caveat to that in a minute. But in theory, mortgage rates, credit card rates, personal lines of credit rates, business line of credit rates, HELOCs, and all kinds of other rates, auto rates should come down, which means that less of the money in the economy is going into interest. In other words, less of the money in the economy is going to the banks, right? Which means, in a sense, if the economy is a car and the gas pedal is consumption, and the money that you spend on interest is the brakes, then when you let off the brake a little bit by reducing interest payments, then that in turn allows for the gas pedal to be depressed further in comparison, which means the car can run faster. And so when you lower the effective federal funds rate, what you're essentially doing is you are causing the United States economy to run faster, which means more investment is taking place, which means more expansion is taking place, which can mean inflation runs hotter. So you have this interesting scenario when you cut rates where inflation can go up, which points people in the direction of Bitcoin, and the economy can do better, which points people in the direction of quote-unquote risk-on assets, which points people in the direction of Bitcoin. And so we had been anticipating a 25% basis point cut. Well, we watched and reported on the FOMC meeting and Jay Powell's comments last month. And it is very obvious that we're going to see several more rate cuts. The CME Group is predicting a 25 basis point rate cut here with 95% confidence on the 29th of October at the next meeting. And then they are predicting another rate cut down to 3.5 to 3.75 with 83.2% confidence by December the 10th. Now, if you stretch it out even to January, they're most likely expecting a hold or maybe even another rate cut in January. So it's possible we're going to see 3 full rate cuts, which is exactly what should happen. It's ridiculous that Jay Powell and the FOMC didn't just slash rates by 100 basis points on day one, like 6 months ago. It's absurd, but it's what's happening because you don't. And here's why. I'm going to go off on a tangent for a second. The effective federal funds rate is, in theory, how the Fed controls inflation. That said, it is not the effective federal funds rate or the interest rate or the amount of interest that's being paid in the economy that's causing or slowing down inflation. What's causing and slowing down inflation is quantitative easing, which is not happening right now, but also just, frankly, currency creation in general. The growth of M2 money through fractional reserve lending and the expansion of the banking cartel. The reason that I say that the Fed should have cut interest rates significantly is because interest rates are a mechanism of controlling inflation, but they're not actually the root cause of inflation. So by changing them, you're not actually fixing the root cause, which is the expansion of money. I want to give you just kind of a lesson on this so you understand. Let's say you go and you put $100 in a bank. Well, in theory, the M2 money supply of your $100 is $100 until you put it in the bank. When you put it in the bank owes you $100, so you have $100 net worth, but they go and loan out $90 to someone else. So now that person has $90 and you have $100, which means M2 money supply was $100, now it's $190. Okay, well now the person that has the $90 that they borrowed, they go and deposit it in another bank. That bank now loans out $81. And so now you have $271 out of $100. And this is where inflation is coming from. It's actually coming from the expansion of the money supply from the Federal Reserve and from the Treasury, but it also happens from the banking sector. And that's why M2 money supply is expanding much faster than 2%. You're looking at 7 or 8%. And that's the real inflation that you need to be concerned about. The interest rate that's being charged is not actually the underpinning cause of M2 money supply growth, and it's not the underlying cause of inflation. It is a mechanism of controlling it by slowing down the economy. Like, really? That's our mechanism? We're going to just slam the brakes on the economy to get inflation under control instead of fixing the banking cartel? Really? Are you freaking kidding me? This is why I hate the Fed. I can't stand it. They're trying to manipulate the inflation by interest rates when the actual issue is fractional reserve lending at the banks, right? Now, why is this important? When the Fed, again, remember, the EFFR is not the thing that causes inflation. It can slow down inflation because it's frankly just slowing down the economy and the economic growth. But when they drop the interest rate, it does theoretically stimulate the economy because although inflation is taking place still, less of the money is going to the banks through the form of interest. And so that is a good thing. So what does all that mean? I know that was probably a lot of information. What that means is that as we see the interest rates come down, debt gets cheaper. Most people do not buy their investments with just cash. When they buy a house, they do it on 5x leverage because they put 20% down on a mortgage. That's literally a 5x leverage trade on that house. That's what it is. When you buy a mortgage at 5%, at 20% down, you're doing a 5x leverage trade. When you buy it at 5% down, you're doing a 20x leverage trade. You're getting 20 times the assets for the cash that you put in. So this is the same thing for businesses. When when businesses expand, they go and borrow money at 4%, they go hire somebody, and that person makes them 15%, and they arbitrage the difference. There are many people that buy Bitcoin, and they'll pay 0% to 7% interest, and Bitcoin grows at 60%, and they arbitrage the difference. And this is how they're making money. If they borrow money from somebody else, they're willing to pay them a base rate because they get the low risk side of the deal. They get their cash no matter what. They get their fixed income no matter what on the interest. And then the other party takes the risk and tries to do something entrepreneurial with that cash. When the interest rate goes down, then the people that are earning money get to keep more of the money that they're earning. What do they do with that money? They buy assets with it. So it's a cycle where people do something twice. One, they buy, for example, let's say Bitcoin on debt. They borrow to buy Bitcoin on debt. Right? They pay 5%. So 5% a year they have to pay. Well, if the interest rate goes down to 3%, the 2% goes into Bitcoin instead of the interest. But on the other hand, because they're paying less interest, they're also more interested in buying the Bitcoin. So it's kind of a double whammy effect where when interest rates go down, asset prices soar. And so that's why you're seeing a big rally in the S&P 500. And that's why you're going to continue seeing a rally in gold. That's why you're going to continue seeing a rally in Bitcoin, is because interest rates are coming down. Inflation is being let fly. And that's going to lead to a massive amount of growth in assets. Over the next 5 years, you're going to see what I would honestly say is like the completion of the split between the poor and the rich. The middle class is evaporating, and that is because of one thing. It has nothing to do with technological advancement. It has everything to do with one thing, and that is inflation. Because the people that own assets are making a killing, like me, and the people that don't own assets are watching their wages go down and down and down and down and down compared to the cost of living. And they're getting screwed. The rich get rich, the poor get poor. Why does that happen? Because the banks are stealing money from you through fractional reserve lending, which causes M2 money supply inflation, which causes the price of goods to skyrocket without giving you squat. The banks leverage the entire economy. Fractional reserve lending is one of the worst things that has ever happened in the history of mankind. It is one of the most dangerous and diabolical forms of business that has ever been done. more so than the interest that is being charged. So, what do we make of this? Again, we want to buy assets. Again, all of this coming into clarity is a big part of the reason why Bitcoin is going to break through all-time high very soon. It's a big part of the reason why I stand by my 130 prediction by 9 days from now. Within 9 days, Bitcoin, I believe, will be trading at 130,000, and then it's going to keep on going. It's going to go to 150. It's going to go to 200. It's going to go to 250. It's just going to keep going. It's a massive rally that is taking place right now that is just going to continue. So if you're in a long, take your profits, wait 0.5%, re-enter. You got no problem with you re-entering, but de-risk because we are out here on a cliff. Bitcoin has rallied a lot. Take some profits. Here's something else you can do if you're in a long. You can say, screw you, Jeb, I'm not going to take my profits. Here's what you do. You got your safety line right there. Boom. 4-hour chart, 20 EMA. You can take your profits down to 122 and lose some of your entry if you want to hold on to the trade. You could do that. But set a take profit somewhere, whether it's here or a couple $100 or $1,000 or $2,000 below us. But lock in some profits, guys. The whole point of making money is not just to see it in unrealized P&L over on your trading account. The point of it is to lock in some gains and pay yourself. Live life. All right, now I also want to talk about gold. It's very important what's going on in the gold price. Again, a lot of people don't want to hear it. You should. Gold is sitting right now at an all-time high. In fact, we hit an all-time high on gold this minute. Literally right now, gold is at all-time high at $3,957 per ounce. Gold is going to have a bit of difficulty breaking through 4,000 because it's a big even. It's a psychological barrier, but it will. It will because of the inflation of the United States dollar. It will because of the currency crisis that we've been talking about, the confidence in currency crisis that we've been talking about. It will continue higher. It will hit 4,000 and then it will break it. It will at some point need a protracted correction, whether that be sideways or down. And the reason for that is because on the monthly chart, the RSI is more overextended than it has been in 45 years. The RSI on gold right now is sitting up here at an even higher high at 90. It's running hot. The last time we saw RSI this high was in February of 1980. The last time it went above 90 was back in 1973. Gee, I wonder what was happening in the early 70s that caused gold to rally so hot. Those who do not study history are doomed to repeat it. If you will remember, 1971 was when Bretton Woods happened, and the dollar was taken off the gold standard. Since then, gold, like a flipping meme coin, has rallied by 10,000%. In, what would that be? 54 years. 10,000%. In 50 years, it has 100x'd. That's terrifying because what that means is that the dollar has lost over 99% of its value. Because the dollar never stopped being valued in gold. It just stopped officially being valued in gold. This is one of the most damning economic stories in modern human history. The dollar went off the gold standard officially, meaning you could not redeem gold for dollars anymore. But the dollar never stopped being valued in gold. Gold keeps up with inflation and outperforms it a little bit. There's a reason why gold averages more than 2% a year. It's because inflation is not 2% a year. Don't believe that bull crap they try and sell you so that they can keep you in slavery. Inflation is not and has never been 2% because it doesn't just have to do with the growth of the price of goods. It has to do with the M2 money supply. This is a story as old as time. Governments want to do whatever they want and disregard the laws of money. And so what they end up doing is that they end up inflating the currency. Gold is not done at 4,000. It would not be done at 5,000. It's going to go to 10,000. Then it's going to go to 20,000. Then it's going to go to 100,000. Then it's going to go to $1 million an ounce. Jeb, you're insane. No, I'm not. I'm very serious. It's happened all over the place. Let me find the chart for this. I'm not showing the chart. Oh my goodness. Noob Jeb, I'm so sorry. Oh, I'm scared to check chat. Everybody's gonna be like, Jeb, you're not looking at the chart. Yeah, no, I got to get another monitor right here so I can see what I'm doing. But anyway, what I'm saying here is that the price of gold has been absolutely exploding. By the way, one thing I want to talk about here is this uptrend right here. Ooh, that's beautiful. Gold broke that uptrend. multi-decade long uptrend. You can see right here. This is what I was trying to show you a second ago. The signing of Bretton Woods. Gold and the dollar depegged. Why did gold start running so much when it wasn't running before? Because the dollar started losing value. That's why. The dollar is lost. The inverse of 10,000% would be 99.9% of its value since 1971. It's insane. At least 90% of its value. It's absolutely remarkable. And it's not going to stop. It's going to go to 5,000. It's going to go to 10,000. It's going to go to 20,000. It's not surprising at all that's hitting an all-time high right now as we have this crisis in currencies. And so those of you who understand this will buy gold. You'll buy Bitcoin. You'll buy hard assets, or you will get left behind. Right? Gold has added 2 digits in the last 50 years. It's up 100x while the dollar is down 99%. That's not a coincidence. It's not a coincidence. And so what's going to happen right now is that gold's going to continue running here. It's going to stop at 4K for a break, and then it's going to keep going. And when it takes a breather, we don't know how long that'll be, but at some point when it takes a breather, a lot of that investment will start flowing over into Bitcoin. Because as gold goes higher, and Bitcoin's still only at 125, there does become this argument that gold is significantly overvalued compared to Bitcoin, which is significantly undervalued. You can even see this on the monthly chart RSI. Monthly chart RSI for Bitcoin sitting at 71. That's nothing. Nothing. We spent a lot of time up there for years. I mean, we spent years above 70 on the RSI on the monthly chart on Bitcoin. Gold, on the other hand, even with the rampant inflation in the United States dollar, we typically don't spend that much time up at 90. Right, so gold will take a breather. I don't know whether it's going to be at 4K or 5K, but it will take a breather, and that breather will probably last several months, if not over a year. And then after that point in time, that's where you're going to see a huge amount of influx into Bitcoin, because people that are taking profits in gold will buy Bitcoin. So that's kind of where I stand on that. Let's look at chat and see all the people saying I'm not looking at my chart. There we go. Frank Calson, Safe Haven, 50x long from 102, sold 50%. Good job. Totally fine to keep half of it. That's great. That's great. Fractional reserve lending is dying. They're now getting their leverage from the Federal Reserve. Banks have a 0% requirement on fractional reserves and no longer need customer money for lending. But yep. Yep. More rate cuts are going to send inflation through the roof, right? Not necessarily through the roof, but it will definitely pull the brakes off of it. Yeah, because this has been the longest that the Fed has been trying to get inflation back down to target 2 and have not been able to do it. And it exposes the weakness in the system, because the tools that Jerome Powell is always talking about they theoretically have some control over the inflation rate, but they're not actually as powerful as he thinks they are. And the reason for that is, once again, because the inflation is not being primarily driven by the expansion of the United States economy. It's being driven by fractional reserve lending. It's being driven by, frankly, just the creation of new money in any capacity. So the interest rate is not the only thing that you need to control the inflation. You also have to control the fractional reserve lending, which they just, funnily enough, turn a blind eye to. Why? Because through fractional reserve lending, you're able to basically control the entire economy. And who doesn't want power over the entire freaking country from behind the scenes when nobody even knows you have it? Green Day Prophet said, Jeb is awesome. So grateful to have been following him for years. Also was lucky enough to meet him at the Bitcoin conference in Vegas. It was good to meet you, my friend. Good to meet all you guys. I ran into a bunch of you guys. Let's see. Yes, Jeb, gold. Yes, I love gold. Jeb, when are you going to get back into rapping? You're pretty good at it. I don't know. We'll see. Taking 3/4 of the trade at 131 and the rest at 142. All right. Yeah, not bad. My main thing is that if you're willing to hold it till 130 and you're willing to hold it through a $5,000 to $7,000 drop that could happen, fine. Do that. But a lot of you guys, if you see Bitcoin drop down to 120, you're going to panic sell and you're going to exit the trade early. And I don't want you doing that. The golden rule. He who has the gold makes the rules. Yep, pretty much. What do you think about alts? Will they run once Bitcoin cools down and money trickles down? Retail doesn't seem to be here for it. Retail is taking a while to show up, and that's honestly a good thing, because I really hope that we can break the 4-year halving cycle. I don't think it's good for Bitcoin. It's nice to get Bitcoin on such a big discount, but I don't think it's good for the long-term investment in the space. I do think that you're going to see a major alt season. I think that it's going to happen. I think that's going to happen in accordance with the Bitcoin dominance chart. Bitcoin dominance has been continuing to decline right here, right? We're trying to break through this 20 monthly EMA right here. We have a bearish MACD cross. So altcoins are doing quite well right now. I'm looking for this trend to break south, maybe down here to 50%. And I'm also looking for part of the thing that's going to drive that would be for Ethereum to break through 5,000 with confidence. When Ethereum breaks through $5,000 with a lot of confidence, that's when you're probably going to see a major altcoin season start. And I don't think that's going to be that long in the future, because you've seen Ethereum just sit up here between $4,000 and $5,000 for a long time now. We didn't do that before. I mean, you did not see Ethereum sit up here for anywhere near as long back in the day as it is now. We've been up here above 4K and just setting it as support for like 60 days. Back in the day when we hit $4,000 to $5,000, we were up here for, let's see, about 55 days. But as you can see, we were basically topping, right? It was not the top of the cycle. It was the top of the cycle. This is not the top of the cycle. And there's no real strong indication that Ethereum is going to break below 4K. So I do think a major rally on Ethereum is still going to be coming. And so, as we talked about, for those of you who listened, a decent time to take profits was right up here, because there was probably going to be a drop, which is what we're seeing right now. So let's just kind of sit here and oogle and ogle as the floor falls out from Bitcoin, and the people that didn't listen lose some of their profits. Hopefully this doesn't lead to a big, long liquidation. Let's watch this right now. Now, again, don't get me wrong. We're going to get back up here to 125. But one of the things I've learned in trading is that when you enter into a high-risk zone, oftentimes it's better to just take the profits, exit the trade, re-enter right after you get out of it. It's kind of like, let's say you're on the interstate. You know, we just went on a big drive. I just drove over 1,000 miles in less than 30 hours just last week. If you have to drive through a bad part of town, you just kind of avoid getting out of the car right there, right? You know, if you're on the interstate, driving through a bad part of the state, you just make sure you get gas before you get to that part of the state, and you don't get gas until after that part of the state. You just hold your pee. You know, that's what you do. It's kind of the same thing with trading. When you're entering into a high risk zone like an all-time high that, frankly, we've hit 4 times and rejected off of. I mean, let's just be real here. All-time high here, 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 and then once again, we're hitting that same zone right now. It's high risk. Dip out of the trade for a minute. Once we break it with confidence, jump right back into it. You just massively reduced your risk while only losing maybe 0.5% to 1% of the upside. Overall, if you play that trade out 1,000 times, you end up making more money because you did that, because you end up losing less money. And it's also less emotional for you, because in the highest risk zone, you're not in the trade. And that's kind of the key. Let's read some chat, and then we're going to have to wrap it out. Does Jeb own gold? I've thought about it, but I don't. I own Bitcoin because I think Bitcoin's better. I have thought about buying gold, but I have a hard time convincing myself to buy gold at these levels. That said, once again, I mean, people say that about Bitcoin. They get into Bitcoin. I don't want to buy it here. It's too high. I'm not saying gold's ever going to go back to $1,000 or $2,000 an ounce, but I would like to see the RSI cool off a little bit, and I am thinking about getting some. So it didn't hit all-time high today. Did not hit all-time high yet. Not yet. Not yet. Looked like it was going to, but not yet. Hey, guys, by the way, if you are enjoying today's stream, make sure to check out one of our sponsors, which is none other than Stampseed. Stampseed is awesome because you can stamp your seed phrases into titanium. Now, Jeb, why would I want to do that? Because titanium has a melting point of like 3,500 degrees Fahrenheit. If you have your seed phrases on titanium and your house burns down, you get to keep your Bitcoin because they're stamped into titanium. They send you this cool little hammer here. And then you get this neat little box over here. Let me pull it out. This neat little box over here that says Stampseed on it with all the stamps, right? Here's, let's see, what letter is this? V, right? Is that V? Oh, no, I have it upside down. That's A. Duh. A, B, C, D, E, F, G. So you have A, B, and basically you just take it, right? I'll do it here on stream. Where's J? I'll stamp my name. Where's J? I gotta find it. It's pretty cool. Turn it over. Yep. There we go. Just looking for it here. I want to make sure I don't get the wrong one. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. There's my J. Take the J. Take you a little stamp right there. This is the fun part. Boom. Now there's a J on there. How cool is that? You just stamp all your seed phrases in there. So definitely worth checking out. If you use coupon code JEB15, I think it's JEB15. It'll be in the description. Use coupon code JEB15. You can get 15% off on your own kit. It's very cool. You can stamp your seed phrases into titanium so they're heat proof. Very much worth it. Very much worth it. All right. Let's read a little bit more chat. Gold cycles are too long. They are very long. Hey Jeb, what denomination are you? I am a Christian. I don't like denominations. I think they're foolish. We go to a Baptist church for what that's worth, and I agree with everything in the doctrinal statement, which is why we're members there. But I don't go around saying I'm a Baptist. I'm a Christian. I follow the Lord Jesus Christ, and I follow the Bible, and that's all I need. So there you go. All right. Hope you guys enjoyed today's video. I got to wrap it out because I got to go shoot today's video. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel because we are racing Bitcoin to 250,000. I think we're going to hit it first, but we're on a race. So make sure you hit that like button and subscribe to the channel. And by the way, if you guys want to get access to our Discord server and come join myself and a bunch of other expert traders, then make sure that you go to the link in the description box down below and you sign up for 2bit. All you got to do to get into the first cohort Discord server, which is where you're going to see a ton of encouragement from all kinds of other Bitcoin traders. We've got like 250 people active over here. We've got all kinds of technical analysis going on all the different charts. Bitcoin, Ethereum here, altcoins, right? We've also got a bunch of winning trades over here. This guy's up 5,500%, 432%, 115%, 111%, 115%, 13,000%. Literally, that's a 13,000% trade this guy's on. It's crazy. If you want to come see how these people are doing these trades, plus 692%, right? If you want to see how people are doing these trades, then the best thing that you can do is come and join our favorite exchange, which is 2bit. If you haven't already signed up for 2bit, all you got to do, check the link down below, sign up. It is hands down the best leverage trading platform in the game. Is no KYC. No KYC. And you can come over here and start trading perps anytime. It's fantastic. The trading interface is second to none. I think it's absolutely wonderful. You've got all your trading tools over here, low fees. You got your trading view integration over here, and also you'll be able to join us on any of the events that our trading team does. So if you've not already, make sure to sign up for 2bit with our link down below. Deposit at least $100 into 2bit and take a screenshot of that $100 deposit. Send it to MalachiPats@CryptoJeb.com. He's our sales and community manager, and he will get you into the first cohort Discord server for free for a year. Now, that is a $49 a month or a $419 a year value that we're going to give to you for free for a year just because you signed up for 2bit. So our Discord server is brought to you by 2bit. Make sure if you have not already to sign up for 2bit, start trading with us today and post some of these winning trades. I love seeing it. I love seeing all these winning trades. It's very encouraging to see this kind of stuff going on. Love it. I love seeing people brag over here. Right? It's very cool. So if you've not already, make sure to sign up for 2bit with the link in the description box down below. Oh, and by the way, I forgot to mention this. You also get the Climate of Crypto videos early. Like this video on Friday was up 2 hours and 3 minutes early over here. On Thursday, it was up 3 hours and 8 minutes early. On Wednesday, it was up 4 hours and 6 minutes early. On Tuesday, it was up 3 hours and 32 minutes early. On Monday, it was up 3 hours and 28 minutes early. I always let the Climate of Crypto videos go out at 2 o'clock in the afternoon on YouTube and on Twitter, but on X. But they go out as soon as they're done over in the Discord server. So if you want to get access to the videos first, get in the Discord server. You can get in for free by signing up for 2bit. That's all you got to do. I really appreciate all of you guys for tuning in. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.